Welcome back to the Dividend Diplomats YouTube channel. You know you're rolling with your boy, the Bert, the Hurt Locker, none other, and you've got Lanny, Triple L, the Dividend Diplomats, and we're here to talk to you about what could possibly be the hottest REIT stock today.
Before we talk about it though, smash that subscribe button, give us a thumbs up. Everyone, the quest to find undervalued dividend growth stocks to help you build your passive income continues. So today, Lanny stumbled on a REIT that he is very interested in talking about. We put some numbers together, did a little research, and are pumped up to talk to you about, as you said, what could be that hottest REIT.
You know, a lot of dividend investors, stock investors out there have been talking about this high yielding dividend stock that is a real estate investment trust, or a REIT, REIT, as what the acronym stands for. We've talked about plenty of REITs in our day. I mean, Bert, name what is your probably favorite REIT?
I mean, Realty Income is always a classic. What about you, Lanny?
The GOAT. You know, they've got a lot of healthcare REITs in the portfolio, but you know, there's STOR, STOR, there's buy as well. There are a lot of REITs out there. Iron Mountain, I know Bert and I both own. A lot of REITs.
Yeah, there are REITs in all shapes and sizes, and why investors like them. They do offer you higher dividend yields, but they also give you the benefit of getting exposure to owning real estate without having to take care of the property. You don't have to get in there. You don't have to make the repairs yourself. You're not responsible for finding the tenants. The management team is, but you're putting the capital to work. You're buying those investments, but you're also getting rewarded with nice dividends along the way.
You don't get to walk in and see Bert's arm halfway down a toilet drain.
Yeah, I wouldn't assume too many people would sign up to see that. So if that's ever happening for a REIT, you probably don't want to invest in it. That's for sure. but
no, yeah. So we have talked about Omega Healthcare recently, the 9% yielding REIT, but we're not talking about them today. We're talking about gaming, gambling, entertainment. Bert, what REIT are we talking about?
Well, this is definitely going to be one that neither of us have necessary exposure to in our portfolio. We were discussing the exact way to say the company's name right before we started. So we stumbled on Vici, ticker symbol VICI. Did I get that right, Lanny?
Vici, Veni Vedi Vici, VICI, a great dividend growth stock as of late, making large headways, you know, currently trading at $28.86. They're up almost a little over 17% year to date. But Bert, why is Vici so exciting right now?
Well, they're exciting because they are growing their portfolio rapidly and they are not messing around on the exact acquisition front. They've acquired 29 properties since 2007, and their portfolio now includes Caesars Entertainment, Century Casinos. They bought the Big Ohio portfolio from the Dan Gilbert-owned company several years ago, with owning now leasing to the Hard Rock in Cincinnati and the Jack Casino in Thistledown in Cleveland, which I know we are very aware of. That is high profile, at least for us in the area. They also work with Penn Gaming and Big Shots Golf, but there were some major acquisitions, some high profile Las Vegas companies that have been announced acquisitions or completed acquisitions. Lanny, you want to talk about those recent additions or future ones?
You know, I'll let you talk about maybe the fun. Well, they've had two or three big ones, but you know, the first big one, you know, they had a nice agreement with the Great Wolf Resorts, the Great Wolf Lodge, doing a big deal with them, adding some of those assets to the portfolio. But Bert, take away for the next one.
Well, they've recently announced a couple of other acquisitions here. The city on the Strip of Las Vegas, they announced the Venetian, the famous Venetian, the fountains, the big mall, the big shows, all of that in Vegas. And then
Bert loves big Vegas.
Yeah, but they didn't just stop there. They are continuing to grow that presence in Vegas. And on August 4th, they announced that acquisition of the MGM properties too. So they are not messing around here.
No, not at all. I mean, and that acquisition of the MGM, is valued at over $17 billion. And, management had said that it was going to be immediately accretive to their earnings and cash flow. I'm sure it's a high cash flow in business, if you know what I mean.
Yeah, they assumed some debt in there too. I believe it was what around, I thought I saw in the earnings release it was about 5 billion of debt assumed for MGM, and they got up to $9 billion of financing there for it from different investment banks. So not cheap, but if it's accretive to earnings and they see the growth and it builds the strategy, builds the brand, you can see why they wanted to continue gobbling up as many of these major Vegas entertainment portfolios as possible.
And how we'll evaluate Vici, ticker symbol VICI again, is when we put them through the wonderful, the none other, the patent pending Dividend Diplomat stock screener. Instead of earnings per share, we're going to use adjusted funds from operation on a per share basis, because that's the way that you should really evaluate the REIT industry. But I do want to mention that they're one of the biggest players now in the REIT space. Since formed in 2017, they've had 29 property acquisitions since then. They're a beast in this industry, and they want to be the main source for all your entertainment needs.
Yeah, and that's very big. And you're starting to see those numbers get reflected through as you start going through the earnings release, where there were some great highlights discussing the results of this growth strategy. In their last quarter results, you saw that total revenues for the quarter were up 46% compared to the last year. That was 376 million compared to 257 compared to last year. AFFO increased as well, over 43%. So 45% on the top line, 43% there from the AFFO front.
So Vici performing very well. The question is, and what all the viewers want to know, is how does Vici perform through the Dividend Diplomat stock screener? Bert, you want to hit them with that first ratio?
Yeah, we're going to talk through our three metrics, and every time we talk about earnings in there, we're going to replace it with AFFO, because as Lanny said earlier, that's what you use there for the REITs. So their price at the time we are recording this video is $28.86. Their annualized AFFO was $1.86, and we got that from their 6-month AFFO from that earnings release of 93 cents. You annualize that, gives you 186. So take the 28.86 share price divided by the 186. That gives you a price per AFFO ratio of 15.52.
Not the cheapest REIT, but not the most expensive, as we've seen. But one thing to note is when you annualize that to 186, that's still still in the range that management expects on an AFFO, because they're expecting $1.82 to $1.87. So $1.86 is within that range, baby.
Let's talk about the dividend. Move into metric 2. We're going to look at the dividend payout ratio. Their annual dividend was $1.44. Divide that by the 186 of the annualized AFFO. That gives you a payout ratio of 77.42%.
Not too bad. So as a REIT, you typically are required to send out 90% of your earnings back in the form of a dividend. Obviously, we're evaluating this on an AFFO basis, but it still shows that there's some room to go on the payout ratio. 77%. Typically, you do like to see under 80% when using the AFFO, Bert.
Yeah, that's exactly right. So let's start looking here at the dividend growth history. They're a relatively new company, at least on the dividend front. They paid that first dividend in 2018, and they have grown that dividend annually since. So a nice 3 years there. They've increased in 2019 a few times, 2020 and 2021, where their last dividend increase, they just announced a 10% dividend increase in August 2021.
A nice 10% increase here post-pandemic. Question all the viewers, well, why isn't the growth streak longer? How come it's only 3 years? They've only been public for 3.5, going on 4 years. So ever since they've been public, they've increased that dividend each year. Again, going back to that October of 2017 mark.
Yeah, the growth rate's been strong. It's been the annualized average 3 year is just over 26%, but that was heavier ramp up at the beginning. Now I'd expect a higher single digit, low double digit mark, much more in line with that 10% increase they just announced.
I'm expecting more of that 3M or Emerson dividend growth.
Yep, there it is. So Lanny, you want to talk about that bonus metric, the dividend yield, because that's what REIT investors want to hear. They want to make sure they are getting a nice fat dividend.
A nice, juicy, meaty dividend yield. You want to pull the slots and you want to hit jackpot, baby. Well, with Vici, they currently yield at the stock price of 28.86, 4.99%. So almost 5%. Not the highest yielding REIT either, which is great because you don't want to chase yield. And I don't think you're chasing that with Vici. One thing I will point out is that dividend income from owning a REIT in your taxable account, you will be taxed at the ordinary income rate versus that capital gains tax rate.
Great call out, Lanny. So here, let's summarize. Price per AFFO ratio is 15.52, payout ratio 77.42%. They've increased a dividend every year since they've been public and started paying that dividend with a strong dividend growth rate, and their dividend yield is 4.99%, just at 5. So fantastic. So Lanny, overall, the viewers want to know, what are you going to be doing with Vici? Are you going to be watching, buying, or let us know your thoughts?
Veni Vidi Vici. I don't know. It's pretty interesting. I really wanted to see what Bert and we've been talking about. We really wanted to peel back the layers, see what their earnings was, see what management said, and see what the metrics look like. Well, management is high on Vici, obviously representing the company, but they only anticipate further growth. Their actual performance from again, an AFFO standpoint and revenue standpoint, they're off the charts, up over 45%, as Bert stated earlier. Now, looking at the metrics, sadly and thankfully, the metrics actually passed for this REIT for Vici. I may consider adding Vici to I have money still in my Roth IRA, not much, but still have some money in there. The reason why you may want to invest a REIT in your Roth is because then you won't have to pay those ordinary income taxes on those dividends if they're put in your IRA.
Mm-hmm. There it is. So Lanny's going to be keeping an eye on them. Maybe he'll be adding a small amount here in his Roth to avoid those taxes. It's a great call out.
How about you?
I don't know. I feel great, but I've been burned by this road before. And keeping an eye on the dividends and growth, there was a time when I invested in a REIT that was called ARCP. They eventually turned into VeriREIT, which recently just sold to Realty Income. So there are several differences. Vici's dividend yield isn't as high. It's not, the aggressive growth isn't there, but the story was similar. So there are some things that I'd want to make sure happen to avoid that same mistake for me. It was similar. They were growing like crazy. They were acquiring books of portfolio. They were building the vision. They kept growing. They kept growing that dividend. It became closer to becoming unsafe, and then it became unsustainable. There were some accounting issues, which obviously never can translate from one company to the next. It's unique, but I want to see a little more history from Vici. I want to see some more. I want to continue seeing more quarterly results delivered before I go in and invest. It's not that the growth story can't happen. I would never say don't invest because of my one bad experience. But for me, I want to see some of that consistent growth and the strong results. But that is there for Vici.
Well, I mean, you make a good point. Finally coming out of all the stimulus, obviously you need disposable income to go and entertain yourself at these properties. Obviously there are some addictions involved as well. So there could be a moral component to this as well. So no, I respect it. The question I want to ask all the viewers, if you already own Vici, smash that thumbs up. If you're looking into Vici, let us know in the comments what's either holding you back or what's going to make you buy this dividend stock right now. Let us know. We want the feedback.
Yep. And subscribe to our channel if you haven't already. And let us know what other companies, what other REITs, dividend stocks you want us to take a look at. I know we keep getting asked about Carrier Corporation. We haven't forgotten about you. We're just continuing to keep building them and adding them into our queue bucket. So we promise that one's going to be coming soon.
So that was Bert and this was Lanny talking about Vici. VICI, the Dividend REIT, the hottest REIT in the market right now. That was the Dividend Diplomats, over and out.